via the stock market has to be done through a stockbroker. So your stockbroker would be your go-between man. That individual would be the one who is buying shares in any of these companies on your behalf, or selling the shares on your behalf in any of the companies that are listed. Right? So that person will be doing that. The brokerage houses or brokers are the only persons who can buy shares on your behalf and sell shares on your behalf via the stock market. So you can't go to the company and say you want shares to buy, and you can't come to the stock exchange and say you want shares to buy. You have to go through a brokerage house. Now the inside back cover of your booklet, and I will encourage the reading of the booklet if you even once. It's down to earth, straightforward. All the companies that you see to the back, those are the licensed individuals. Those persons are the individuals who are licensed to sell and buy stocks on your behalf via the stock market. Right? Now, what's the procedure? You have to be 18 and older to buy the shares. Right? You have to have your valid ID, as with any business. You have to have your TRN and your money. Right? Yes, very key. Now, you go into the broker. Let's say you were not au fait with what the market is, and you have the money, you want to invest, you want to invest in a company, but what company? You don't know. You get me? What happens is that the broker's responsibility is to advise you what to buy, what to sell. So they are the ones who can actually give you the advice as to what you buy and what to sell. So if you are not knowledgeable about the stock market, you can get the advice of the stockbroker, right? Let's say you didn't have the money now, but you know you're going to get money in the future, near future. You can call them. I'm thinking about investing in the stock market. What is the best thing to invest in now, X, Y, Z? And they can advise you. That advice is free. Right? Now, if the broker is to carry out the transaction for you, having, relate what you want in terms of saying that you want to invest, let's say you're a first-time buyer of stocks, they would assess you. They should assess you. What type of risk taker are you? Because the stock market is high risk. There's no guarantee for return, right? And it's considered a long-term investment. So therefore, their responsibility to you would be to assess your risk tolerance. What it is, what type of person are you? So they're going to look at certain things. They're going to look at your age. So if you're a pensioner, they're going to be more cautious as to what they invest in, because they're going to say to you, okay, well, this company will yield, but not right now, right? But when it yields, it's going to be big. But can you wait, right? So they're going to assess whether or not you're a high-risk taker, whether or not you're a low-risk taker, medium-risk taker, and then create your portfolio for you, right? With regards to the monies that you have and recommended stocks that they're going to tell you what they're going to invest in. So they're going to do all of that on your behalf. Now, once you've agreed to say, okay, I'm willing, based on your advice, to buy or invest in the stock market, what they're going to do is create an account for you. Now, the account that is created, everything now in terms of buying and selling of stocks is done electronically. So if you don't have an electronic account, you can't buy stocks on the market. If you don't have an electronic account, you can't sell stocks on the stock market. So once you have an electronic account, that will give you the go-ahead, or give the brokerage house the go-ahead to buy the shares on your behalf and sell the shares on your behalf. Now, what would happen is that the broker would create an account for you. Now, that account will be held in the stock exchange's subsidiary, the Jamaica Central Securities Depository, right? We call that for short the JCSD. So the Jamaica Central Securities Depository would be the company that holds all electronic accounts. The stockbrokers would have access to that system. Now, the system that we use to trade electronically is called the Global Vision, and it's really a system that is used for the three main markets, Jamaica, Barbados, and Trinidad, right? So the broker creates the account in JCSD for you. So you now have an electronic account. Let's say you went yesterday. The broker now would come today. We have trading Monday to Friday, right? So 9:30 to 1 o'clock, that's trading. What is trading? It's really the buying and selling of stocks. So trading is the buying and selling of stocks. And we have that between 9:30 to 1 o'clock every day. Well, 5 working days, right? So you open the account. You have your electronic account. It is in the JCSD, Jamaica Central Securities Depository, and the broker is going to take that account number. Now, he's going to put it to come today, because he went yesterday evening, in the Global Vision system, which is the trading system. So this morning, the broker would have inputted your account number with the shares that he or she is planning to buy on your behalf. Now you might say, boy, but you're not getting much leeway. I mean, the broker can just buy it at certain cost and all of that. What's the cost? How does that work? You can limit your broker or you can unlimit your broker. What we're talking about? We are saying that, listen, you can't negotiate yourself. So you need a broker to negotiate on your behalf, right? And it's electronic system. So how does the broker negotiate? You know, let's say the broker says to you that, hey, listen, Scotia, Carreras, NCB, they're costing $8, $2, $4. You want him to buy. Normally, the game plan for buying is you want it cheap. So you have 100,000, you want all of these stocks, but you want to get as much stock as possible with that 100,000, right? So you can limit the broker by saying to them, listen, I know the stock is costing $8.22, right? $8, $2, $2. But here what? Try and get it as cheap as possible. So, but however, don't buy it for more than $8, right? So the broker know what their game plan would be is to put your account number in the system, indicate the stock that you want, and because you're coming from a low, the broker is going to put a low cost than the $8, probably start at $7, to see if there's anybody out there who is going to buy the stock or sell you the stock, sorry, for that price, right? Let's say the system is not, the Global Vision is not picking up anybody, because what the system does is match buyer to seller. So just like your broker is going in there to buy NCB, to buy Scotia, Carreras, and the different stocks, you have persons who approach the broker as well to sell these stocks or to sell other stocks. So the Global Vision retains or holds all the persons who are selling and all the persons who are buying. So each brokerage houses have access to a stock exchange system. What we do out here is that our trading department, who monitors the trading, along with our RMOD, Regulatory Market Oversight Division, trading department brings up the system, right, which is the Global Vision system. They bring it up from 9 o'clock, and the brokers can pre-enter the orders. But the system start matching orders, buy to sell, quantity for quantity. So you might want your 800,000 probably just split up and say, all right, 20,000 is NCB, 10,000 Carreras, and 10,000 Glean. I'm just saying, right? Somebody else might be selling $1 million NCB, but your price of $750 matches somebody else's price to sell at $750. So the system matches those two, buy to sell. So from that million, you'll be able to get your 20,000 shares. And somebody else from that million will be able to get their 10,000 shares, providing the stock correspond and the price correspond. Body with me? All right. So that's the mechanics of it. So the broker gives you the advice, creates the account, and places it into the system. And then the system now matches buyer to seller. So every day, that's the process. Now you cannot buy less than 100 shares, and you cannot sell less than 100 shares, right? So you can't buy more than 100 shares and you can't sell less than 100 shares. That's just how it is. So if you're planning to buy or sell, it cannot be where, that's just how it is. Right? The system, they have set a mark, a limit that you can't go below. Right? Even if you have 190 shares buying and the system matches 100, the 90 share will stay in there and it will not be taken up. It will totally ignore it. Right? Even when we had the manual system, and I talk a little on the manual system, right? That's how it is. So they set a lot that you cannot go below, right? So the system matches the order. Once the system matches the cost, the quantity that you want, that your broker has placed in there, what is going to happen is that the system, the global vision system, which is connected to the Jamaica Central Securities Depository System, it's going to send, takes from the seller account, because the seller, if you're selling, you must have an electronic account as well. So it's going to take from the seller's account and transfer it to your account, who is the buyer. Once the system finds a match, now, bam, it transfers that amount and deducts from the seller. Now, they call the broker and the broker say, yeah man, it got through, everything got through. Just sell. The shares are not legally yours until T+3. So if you're buying and the broker say, yeah, you can get it for 710, and then you see we have a running ticker on our website and you see it going for $7, you can go say, alright, reset it. What, you can get some more from it, or you see it all of a sudden, you see it jump and gone up on the same day, at 7:15 or 7:30. Yeah, try it now. Sell it back right away too. I don't know. You understand? Anything can happen. You can't sell it back right now, and you can't expect to get your cash today either. So once it's bought, it's not legally yours until the day that it trades plus 3 working days. T+3. The day that it trades plus 3 working days. Right? Reverse, you're selling, you can't go to the broker now for your money. I say you want your money. No. Right? You have to wait a total of 4 days. T+3. Date that it trades plus 3 working days. Alright? That's what it is. And we call that the settlement cycle. Right? Now, how the brokers get the money from one hand? Do they go into the person, because there's another brokerage house selling you the stock on behalf of their clients. Every broker must have, we utilize the Bank of Jamaica. Bank of Jamaica, they have a clearance system, and what they do is all of them must have monies over there. So at the end of trade, 1 o'clock, it closes off, and the JCSD runs a settlement cycle. It runs a system which connects to the BOJ system, which tells which broker is to pay which broker. And then what the BOJ and the Bank of Jamaica does is just wire the money from account to account. So if you're not an account and you're the overdraft, it's like wicked. Right? So you have to have the money over there. A lot of the brokerage houses collect your money up front if you're buying. I don't know you're from Adams, more money now. Right? So they collect that up front. If you are familiar, you might say, alright, when it's bought, I will call and you bring the money come. Right? But normally they collect the money up front. And a check is drawn for you to go and collect. They draw the check. If you sell, you go in and they normally give you a check if your stocks were sold. Right? In terms of, let's say something happened. You told the broker to sell 1,000 shares and you make a mistake and sell 1 million or bought 1 million. Always have something in writing. Trust no man, woman. Right? Like boy or girl. You are in business, and therefore if they were your high school, prep school, college, church, party goer, whatever it is, they can shake on, jump up and down, have something. Too much device the way you can say text, buy, sell, right? Because once it goes through the system, there's no turning back on that. Somebody has to pay, or somebody has to come for the shares. So what would happen if there's an error in your order? The broker would send a trade correction to the stock exchange and we correct your account. So if you're on the buy side, they would have to come up with the money to pay for the shares internally within the brokerage house or the shares itself. Right? Does the broker do it for you free? No. They charge you a commission to buy the shares and a commission to sell the shares. Some brokers might say 5%, 2%, depending on the transaction. They might say 1,500 transaction that amounts to 500,000. Anything over that, they start charging you percentage, right? So they all have the various fees. So they don't do the transaction for you free. You have to pay a commission to them to do so, right? The traders or the actual persons, analysts, they get a commission to buy the share for you from their separate individual brokerage houses and to sell the shares for you, right? Plus they pay, plus them pay. So it does them good to have nice, satisfied customers who spend only the millions, right? Because it means that they can get a good commission. So they have to come good. If you're in the business and you're in the business to make sure that you're going to make your name, and what happens, brokerage houses, they head on each other's analysts. And you have some clients who are that faithful, they move from one brokerage house to the other, and when you move, they move. Right? And no business want to lose $1 million client. Right? Alright, in terms of what we used to have. A lot of person, when they hear the market, they're expecting excitement, noise, and they say, what? I want to trade another start. In the manual system that we used to have, we had, I guess when it first started in 69, they had like 2-day, then 3-day, then 4-day, then they settled at 5-day. I'm not 100% sure if the 5-day came when electronics started. Yes, it did. Right. It was 4-day before. Open outcry, everyone, all the brokerage houses, all the representatives had to be at the JC, present at the stock exchange to carry out their orders on behalf of their clients. Right? Or as it suggests, open outcry, the trading department would be the presiding officer over it, and they would cry out aloud what you want to buy, what they're buying on behalf of the clients, and what they're selling. And they have to go back and forth. On the offer, bid that $2.50, and someone say on the offer, off the offer, depending on what the prices is. And they have to negotiate face to face. So if you come and say $2, and someone say $2, because it's over here, the first corresponding order would get the share. Right? Can't decide back then, them flip a coin. 3 persons say it, and we don't know who, and you say flip a coin. That's what they used to do. Now the system decides on that. Back then, they went in alphabetical order. A, B, C, D. Company A, Company B, Company C. Right? So if you want to buy something in Access Financial, and there are at line, tomorrow thing that. Right? You have to wait until tomorrow to come and get your stock bought or sold. So that's how they used to do it. In the present system, 1 minute before 1 o'clock, a brokerage house can put in the information, bam, the order. System finds a match, the order goes through. Now, you buy the stock, what is the expectation from the company? Once you buy stocks, you're automatically a part owner of the company. So investing in stock makes you a part owner of the company, right? So you'll be entitled to certain things. Now, from time to time, you'll hear persons using the terminology. They might say shares, they might say stocks, they might say units, they might say security, same thing, right? Security, however, you have to be careful, that can mean stocks or bonds. So they use those words interchangeably. In terms of the benefits, once you buy the stocks, because you're a part owner, when the company makes a profit, you will be entitled to what we call dividend payment, right? That's cash given to you because you're a shareholder. So the company would give you this because you are a shareholder of the company. Now the market facilitates ordinary shares. Okay, ordinary shares. Oh boy. Ordinary shares and preference shares, right? So persons are able to invest in ordinary shares on the market and invest in preference shares on the market. And you're familiar with the both, right? No? Okay. All right. As an ordinary shareholder, a lot of times if a company is listed, they would classify what type of shares they're issuing, whether it's ordinary or whether it's preference. Now with ordinary shares, once they're listing, anyone can purchase those ordinary shares. So the company approached the exchange, passed what we call a fit and proper test, looking into their financials, looking into their board of directors, making sure they have the necessary licenses to come on board and offer people stuff. Once they go through that process, they would classify or they would put in what we call a prospectus. And the prospectus would highlight the type of shares that they're issuing. The prospectus would highlight how much shares they're issuing, the price of the shares, why they want the money, right? Who are the directors, the managing director, the chairman, staff, complement, whether or not they have subsidiary overseas or within the island, their 3-year or 4-year financial, summary of their financials, all that would be in the prospectus, right? And that would give you a point to say, I want to buy some ordinary shares or preference shares. Ordinary shares, once you get that, once it's listed, anyone can buy it. What is the benefit? Dividend, that's cash given to you because you're a shareholder. Another benefit of an ordinary shareholder, you have voting rights. Every company that is listed must have an annual general meeting, and that's a shareholders meeting. So that's a meeting for shareholders after the year end. They host a meeting, right? Once you are a shareholder, you must get a copy of the company's annual report, right? They must send you a copy of their annual report. So you can look at the information that is in there, look at their financials, look at their corporate data and see what's happening. I always tell people, because some persons when you go and say, boy, I believe I get it all right, but I don't know how to read it. Profit loss. Don't know what accounts? Profit loss. Right? You want to know the profit line or you just want to know that line? So you say, why make a loss, why make a profit? Because probably can't understand the semantics of the different, the figures. So, when you're talking to a person, you tell them that. Profit loss. Well, that's right. Right? Alright, so you must get that. So you have voting. Once you get that, it will show you the notice of meeting, notice of AGM. So that would be inviting you to attend a meeting for shareholders. So as an ordinary shareholder, you'll be invited to the meeting. But it goes a step further. You can also vote on matters relating to the company that is placed on the table at the meeting, right? So you'll be able to, they might be voting on whether or not dividend payment is made, whether or not the company retains the earnings so they don't pay out any dividend payment, all in favor of the director, this man being the chairman, say aye. All against, nay. So you have those voting rights as an ordinary shareholder, right? Also, it's a Q&A. You get the opportunity to speak to the directors, to question them about what is happening with the company. You don't see anything happening. And we find that a lot of shareholders, they don't get active. They buy the share and them just say, sure, we may have a share for investment, and the big man them run it. But it is not good for directors to think that it's an easy road. They must be accountable, they must tell you what is happening, and you must be able to give your insight on what you think should happen because you're a part owner. So no matter if you own 100 shares to 3 million shares, you get one vote and you get to have your opinion with regards to things. Read the company, right? Also, so that's ordinary shareholder. with an ordinary shareholder, however, if the company is being liquidated, you would get your payment last. Right? If the company goes into liquidation, they would give you back your returns last. As an ordinary shareholder, the company can say that they're not paying any dividend payment. They're going to retain the earnings, and what's going to happen is that they're going to keep the money and reinvest it into the business, retool, buy out a subsidiary so that they don't have to buy out a subsidiary, so they have to keep importing bottles, improve their service, all of that. They can say that to you as an ordinary shareholder. However, ordinary shares are traded more often than preference shares. So you have the ability for what we call price appreciation. Capital appreciation, sorry. What's that? You buy low, you sell high. Now, one of the things, even though the stock market is high risk, no guarantee for returns, and it's a long-term investment, you must always set your goal, what you want to achieve, because hear what? If you're a small to medium-sized investor, the dividend not going to be much, right? How you make back your money is the capital appreciation. You buy the stock at a particular cost, so you buy it at $8, probably your goal might be 100%, so alright, you want to sell it back at $16, right? So you set a goal in which you want to make back your money. It could be 6 months, it could be 3 months, it could be 2 years, it could be a year, right? It could be 3 years. Everything is dependent on the economy, what is happening with regards to the company, how far the company's market really expands its market share, how persons perceive the company, all of that. You know, all of that is dependent on the company itself and how well they perform. So you set your goal. If it reaches at the point that you want to sell it, you can make the decision whether or not you want to sell it sell the entire thing, get your principal plus interest, and then go back in when the stock is low, because the stock prices fluctuate. They go up, they go down, they go up, they go down. So you have to make a decision on what you want to do, right? Some people say, boy, I can't watch the market every time. All right, there are certain things, signs everywhere. I just showed that one time. There are signs everywhere, right? So you need, you can't live in a vacuum. You have insurance company. Here I don't know how much hurricane I said this year. It's you're gonna get how much hurricane? I said, yeah man, I'm not gonna work, I'm not gonna school, I'm not gonna work. How will that affect you? And you have surgical shares. Hello? People are gonna make claims, right? If you have hardware and lumber shares, you might say, yeah man, thunder, fire, thunder, lightning for them. I don't know. Because if you say people are rush to the hardware store and buy up on hurricane. You have broiler shares, you hear everybody turn vegetarian. You read a report and say half of Jamaicans now vegetarian. And oh jeez, oh sure go. Stop eating chicken. Or you might have people still sliding the fish, you know, but Jamaica broilers sell fish, but chicken is their business, right? So there are certain things. Business news comes on, you flip it. I'm too bored. I understand what I'm saying. You know, right? So you want to keep your head in water. Phillips is coming with his budget debate. What is it going to tax? What is it going to take subsidy from? You know, so all of these things you can use, because you cannot afford to pay a brokerage house to manage your account. But you want to read. You want to. Sometimes we are often on our devices, but we don't tweet about certain things, you know. It has to be what's hip, what's hot, all of that. There's certain times you just have to take a step and say, boy, but wonder what's happening, you know, draw breaks. So ordinary shares, you would be entitled to that. Also, we call rights issue, company issuing more capital. You can actually invest. You're able to buy more shares within that company. You can sell more shares, but only to existing shareholders. So you would have that ability as an ordinary shareholder, right? Preference shares, what's happening? Companies listing is only going to, I wonder.